Greetings and salutations all. Welcome back to the Stock Market Professor. Before we dive in, a quick reminder that everything I share is for educational purposes only and isn't personalized advice. Markets move up and down, and while I show you strategies I use personally, always consider your own goals and risk tolerance. All right, let's get started. The quote of the day: I love this Buffett gem because it captures a long-term mindset at the heart of successful investing. Patience isn't just a virtue, it's a competitive advantage. Those who can remain calm and disciplined during periods of stock market volatility are more likely to achieve their financial goals than those who are constantly trying to time the market and chase the latest headlines. Just food for thought. And here's my shameless plug. My book on the Forever Paycheck. It's $9.99 on Amazon, but it's packed with $1 million worth of wisdom. If you've already purchased the book, thank you. But the QR code is on the screen and the links are at the bottom. So I received a great question from a viewer. He talked about the YieldMax stock ULTY. And so what he asked was any idea on how the volatility will impact the dividend or the net asset value. Also, you work for Berkshire and you're a disciple of Warren Buffett. So I work for a Berkshire Hathaway company. But I don't see Warren Buffett investing in this kind of risky asset. So how do you explain this? So great question. So how does volatility affect ULTY's distributions in net asset value or NAV? The viewer asked, why use a risky covered call ETF at all? So let's break this down into two parts. So part one, first, the mechanics of ULTY holds a basket of 30 to 50 large cap stocks and sells weekly call options against them. So when volatility spikes, option buyers pay more premium, which means higher income for the fund and ultimately bigger weekly distributions for you. Conversely, in quiet markets, option premium falls, so distributions can tighten. And because the fund targets a steady payout, it will occasionally draw on net asset value to top up distributions when premiums are low. And then it'll tuck away extra when premiums are sky high. So the smoothing behavior helps keep your cash flow reliable, but remember, net asset value still tracks the underlying equities. And a big market sell-off will bite into net asset value, even as covered calls soften the blow. But it'll also do that for regular stocks. It'll do it for any ETF. The stock market will go down. At the end of the day, you can build a core wealth with Buffett-style buy and hold positions, and alongside that, option income strategies in a sleeve of your portfolio to generate cash flow. Each one serves a different objective, so one for compounding and the other for spending and reinvestment. Let me throw out another Warren Buffett gem. Knowing your circle of competence. Warren Buffett says it's really important to only invest in companies that are inside your circle of competence. You don't need to know everything about it, just the ones you're thinking about investing in, and do your research. And believe me, I've done the research. Staying in your circle of competence helps you make smarter choices and avoid making big mistakes because you know what you're doing. Buffett even says he feels safer investing in things he understands, even if his circle isn't super big. It's like playing a game where you know all the rules and how to play really well. You're much more likely to win if you stick to the game than trying to play a game you've never heard of before. And the cool thing is, your circle can grow bigger over time as you learn new things, but it's always important to know where the edge of your circle is so you don't accidentally wander out and make risky choices. You can do your due diligence, but you have to know what is and what isn't, which is why in my previous video I talked about what ULTY is, and I understand that I'm about income generation, but I'll take it a step further. Here are some top recommended ETFs that Wall Street recommends, and I even listed some in my Warren Buffett book. So they're fabulous stocks, but when you compare them to ULTY, here's the difference. ULTY will win every time, and I've done the research. Why ULTY wins? It pays weekly, and the cover call outlay boosts effective yield close to 9 to 10% range. JP Morgan, JetQ. I love JetQ, but when you compare it to ULTY at this moment, ULTY is a third of the share price. It has a weekly pay schedule and lower volatility than JetQ. It's shocking, but it's true. The Global X, QYLD, which is pretty close. Now, this is an industry stalwart, huge assets under management. It's the NASDAQ 100. But when you compare the payout to ULTY, ULTY even has a tighter circle of 30 to 50 stocks, not 100. And so it has lower drawdowns. And this is just my recommendation on what I'm doing with my portfolio. And I'm all about income generation. So if you want to grow money fast, this is how I'm doing it. And I'm being very transparent. The difference in this is the price is so much higher and it pays monthly. ULTY wins again. And so the verdict is, for me, weekly distributions, low per share cost, covered call boost is ULTY's sweet spot. And now if you care about annual yield, then the other three will edge out ULTY by about a half a point or 2%. But they all pay monthly and trade at higher prices. So like I said, this is all personal choice. Global X is close, but the yields are less and it pays monthly. And so bottom line, if you love the real-time thrill of weekly checks bouncing into your account and you want ultra-low volatility, this is what I'm doing and this is what I'm sharing and I'm breaking it down. All right, that's our deep dive on ULTY's risk-reward profile and how volatility plays into your dividends. Back to my original account. So here's what I have in this account right now. And as you can see, I have ULTY and I'm steadily shifting out of some of the other YieldMax stocks and slowly building my ULTY additions to where I will have one or two ETFs, with the majority being ULTY. And my purpose is income generation. And so I'm treating this account like a real account that you can watch at any given time. And we'll see how this account grows over the year. I also created a Roth IRA. And so I'm slowly adding to it. I can put up to $8,000 in it. I'm steadily adding little by little. As you see, I have a very small ULTY position, and I will transition it over the weeks that you can see, depending on the price and entry points. So I want to do this strategically so you can see it step by step, how I'm doing it and growing this account. And so you can watch this account live, and the proof is in the pudding in what I do. If you found this breakdown helpful, hit the like, subscribe, and ring the bell so you never miss a weekly income update. Drop your question in the comments or go to the stockmarketprofessor.com and hit me up at info@stockmarketprofessor.com. And I'll answer your comments on a future video. And until then, stay patient and let your gains work for you. Peace and blessings. I'm John J. Sneed, the Stock Market Professor, out.